Okay, good morning, everyone. We're going to get right into the stock market technical analysis. Big day today. It is Fed Day, so we want to talk through, potential outcomes after the FOMC meeting. And I want to look at the charts. We're seeing some interesting price action pre-Fed, so I really want to get into that. And that's why I'm getting this video out this morning. So if you guys are new, check out my course. I put a course together about a year and a half ago based on subscriber requests. And link is in the description below, so check that out. And then real quick, guys, I will be out of town for the rest of the week after today, and I won't be back until next Tuesday. I am going on vacation, so not back till next Tuesday, and I won't be able to get a video out. So that's about it, guys. Drop me a thumbs up. Let's get it right into it. Triple Qs. So we're seeing the market rally over the last 2 days, and I talked about yesterday how I had pretty low conviction in terms of in the short term where the market was going to go to. So I just wanted to really make a point of that. And I also dropped a comment in the video that I was going to lighten up on all my shorts, which really made a lot of sense, kind of where we were at right before the Fed. So these trades on the triple Qs, the short, again, we shorted this thing at January 4th. It's been extremely profitable. But we are now right before the Fed. It just doesn't make sense to be heavily short. I was looking for a sell-off into the, before the Fed came out. We got a little bit of that, but just not what I was really looking for. So I lightened up on my shorts. Now, I do want to point out kind of something interesting today. We're seeing the market gap up and rally right into resistance. That's this downtrend line right here. So we are in a downtrend. And you can see all the tags of resistance, and we're right there now. So I think it actually makes sense to reestablish a short, at least in my opinion, right here at this resistance level. Even though it is right before the Fed, we're seeing a rally into resistance, and it's just right before a major event like a Fed. This is most likely not institutional trading. This is likely just market makers playing games, rallying it into resistance right before a Fed meeting. So I think there's a good probability that we see a sell-off, a sizable sell-off after the Fed comes out. So that's kind of what I want to point out. Or potentially we sell off right before the Fed. We sell off pretty impulsively, maybe fill this gap right here. And if we do that, I'll probably cover some of those shorts right before the Fed. The gap is about at 329. So if we sell off and run down towards that level right before the Fed, it makes sense to lighten up on those shorts again and just let the Fed get out of the way. So potential trade right there. Another potential trade we might get a shot at it is this Qualcomm short. So again, we took profit on the daily chart here. There's this big gap. We filled the gap right there the other day, yesterday actually, 138.84. And so that's where it made sense, where you were likely going to get a reaction, some sort of a bounce. And sure enough, we are bouncing today. So what I would be looking for is to reshort this thing as it runs back into resistance at 153.50 and the 200 days just slightly overhead. That's kind of where that gap started back here. So good resistance right up there. If this wants to rally a little bit more, that's the area that I'm looking to short for a move. And this will really be for the next move down, down to the support level again, and then likely going to break and head down to the next level of support, about 123. So just a little bit more to the upside, and we'll get a very objective short entry. And just another reason why I think that the Qs rallying today is very likely going to get faded and sold into probably before the Fed comes out. We're not seeing bonds move at all. There's no movement in the bond market. This is where the institutions play for the most part, and they move big money. We're not seeing any big movement today. So institutions aren't taking and moving big positions right before an FOMC meeting, which tells me that the rally in the Qs has a very high probability of being sold off into the Fed, or perhaps after the Fed. Okay, gold. Gold continues to sell off, so it looks to me like we are going to get that backtest situation, that backtest setup. About 1840 right now is the target in gold. We might get that today. So you got to be, you sometimes have to be quick. We'll see how this trades after the Fed comes out. But again, we're looking to buy gold on dips. And if we can get that back test of that breakout point, gold did break out. Coming in for a back test would make a lot of sense. So again, looking to buy on this trend line. Today that would fall at about 1840. So anything down in that area is where I'm looking to reestablish mining positions, reestablish, buying gold, all that. And again, the Fed is expected to do a 25 basis point rate hike. That's what's kind of priced in right now. So we could get more, perhaps there's going to be a 0.5%, and the Fed's going to come out and maybe surprise the market. If you surprise the market with a higher rate hike, then likely that is going to be, at least in the short term, negative for gold and negative for tech stocks. So I could see that playing out. One thing I'm thinking is maybe the Fed knows that they can't hike rates that much. They can't actually go that high. So rather than try to go high, maybe what they'll try to do is kind of shock and awe, come out with a surprise hike of something higher than what the market was actually expecting to try to really take some of the pressure off of that inflation trade. And then maybe if that happens, they actually won't have to hike as high as they would really need to get this in trade contained. Okay, DVN, possible sell signal today. Now again, it's not quite there, so we definitely want to wait till probably after the Fed. But I want to point it out prior. DVN, this is an energy company, so this is kind of an oil trade. You've got trendline support right here on the daily chart right there. We got lots of tags of that support line. Got close right in here, didn't quite get it. Negative divergence has been building on the momentum indicators, telling me that, okay, this uptrend is likely about to reverse or at least get some sort of a pullback. We got a breakdown 2 days ago, not super impulsive, but definitely a break below the trend line, followed by the following day, more selling, but then the buyers did step in. And again, we're still relatively close to the trend line, but if we get more selling here today, then likely that's going to be the sell signal in DVN, and we're probably going to, sell down to our first level of support at about 45.17. Again, from where we're at now, that would be a drop of about 15%, 14.5. So there's a potential trade idea. Again, we got to kind of watch the price action, and anything right before the Fed meeting is going to be high risk. So I definitely want to point that out. That's really all I have for this morning. Just a quick video. Really wanted to point out that Triple Q's rally and where we were rallying to. One thing to note, XLF rallying right now right into the 200-day moving average, just slightly above it. But again, I think this is probably where the run on this thing ends, most likely, and we're going to get rejected and sell down. So there's another potential short. Again, you're stepping in right before the Fed, though, so definitely higher risk. Okay, guys, I'll get this video out. Again, I won't be around for the rest of the week, and I will, if anything gets crazy towards the end of the day, I'll put out another video just to wrap up, and then I'll see you guys on Tuesday.